Hello everyone and welcome back to my Forex channel. In this video, I will show you the most profitable Forex scalping strategy that you can use an easy and straightforward approach to make profits quickly. The concept of scalping may be considered in several ways depending on actually who you ask, but this specific way of trading considered it because of the little amount of money involved and the fact that transactions are short term. Scalping methods may vary from trader to trader, but the one thing that is commonly agreed upon is that the scalping includes loads of tiny trades. Forex scalping is usually recognized as an advanced trading strategy, but scalping is relatively easy in concept. Many people consider it to be complex because probably it demands a lot of quick decision making, fast reaction time, and the ability to execute trades rapidly. I mean, ordering coffee at Starbucks while scalping is a good idea, as the keyword for the scalper is speed, although with enough time and practice, even newbies may perfectly master the art of scalping. And if you're new here, consider subscribing to my channel if you enjoy this kind of content, and of course you're always welcome to join my free Forex group where I share profitable trading setups. I will leave a link in the description box down below so you can join. So this scalping strategy requires RSI, EMA and stochastic trading oscillators. This Forex trading approach allows you to trade any currency pair, but when you first begin, I recommend trading Euro USD and GBP USD, and the reason why I recommend these two currency pairs to begin with, because during the London and New York Forex trading sessions, the market is very liquid, and that's why you may profit quickly utilizing this scalping approach. So without further ado, let's begin by adding the indicators to perform this strategy. So to incorporate RSI, stochastic and EMA, simply choose indicators and type RSI. It will be the first one, so relative strength index, and click on it. Next step is to have a stochastic, so basically type STO and that will be the first one. And the last indicator we need is exponential moving average, so you can either write moving average exponential or you can definitely write EMA, and that will be last indicator we need. Once all indicators are set on, the only thing that's left is to modify the EMA settings. To do so, just basically click on this icon, go to the input section and change the length from default to 200 and press OK. An exponential moving average of 200 will assist us in determining the trend. If the candlesticks are moving above the 200 EMA, we will consider a buy trade. If they are heading below, we will aim for a short trade opportunity. The RSI indicator will remain with default values as it will help to find hidden divergence, and finally we will have to wait for the signal from stochastic crossover to enter the trade. And I strongly suggest you to practice this scalping strategy on a demo account for at least a month, where you can complete at least 15 to 20 trades, but more is preferable before you're actually trading with the real money. Consider the following buy example on the Euro USD 5-minute time frame. To enter the trade, simple but critical rules should be followed. The 200 exponential moving average must be below the candlesticks. At the bottom, you will notice that I have the stochastic indicator, which is beneficial to us in terms of identifying possible entry points, since the indicator will create a crossover. When you see that the RSI line is creating a lower low, check to see whether the price is creating a higher low. If this is the case, wait for the stochastic to cross up, as this is the signal to enter a long position. Also, don't be afraid to mark even a micro trend and any recent horizontal area of sensitivity if you can spot one, as well as any perspective like pattern formation that might be very helpful to you and possibly forecast any price swings so that you can at least manage your trade. If you look closely at the chart, you will notice that I have identified and marked a recent resistance zone. So if the market decides to move in a different direction, I will take half of the trade and then move the stop loss to an entry. So hopefully by having a free trade, I will make a profit without any additional risk. So as you can see, we have a bullish engulfing candle. The EMA is definitely below of the candlesticks. RSI made a new lower low. We have a stochastic crossover to enter. So let's play a replay tool on and see how this trade actually went based on this strategy. And as you can see, our horizontal area of sensitivity was definitely broken with this huge bullish momentum. So this is probably where I would be able to take half of the trade, and then we definitely moving our stop loss to an entry by having a free trade. And let's let's play a replay tool on again. And as you can see, we're probably reaching 16.7 pips into the profit. So again, guys, this is an excellent illustration of how to handle your trade. I also want to address a frequently asked question. So how's the risk and reward ratio when you're using this strategy? Well, it is advisable to keep your risk to a maximum of 2% on any single trade while scalping, but it's even better to keep to 1% initially while you're still learning. But again, the risk reward ratio can depend on different account sizes, broker fees, and risk management that the trader is using. Alright traders, let's take a look at the sell example on your USD 5-minute time frame. As well as for a buy position for a sell trade, rules must be applied, as without it the strategy simply won't work. So we will start off by identifying the trend by using 200 EMA, and as we can see, the candlesticks are below the 200 line, which is a great indication that the selling pressure has not stopped and that the downtrend remains strong. The RSI is the next stop, so we are looking for hidden divergence here, which happens during a reaction in a downtrend when the RSI produces a lower low, but the price action does not. And my suggestion is to watch for the bearish divergence near or at the resistance trend line, or when a bearish reversal pattern forms in an uptrend. However, as you can see in my instance, the symmetrical triangle pattern was broken with a closed bearish engulfing candle, but the RSI didn't make a new lower low. But if we had this huge push, there's always an exhaustion following after. So being patient, we had another closed bearish engulfing candle, RSI made a new lower low, stochastic crossover occurred, and then we entered the trade short on a closed bearish engulfing candle by profiting 25.6 pips. Then of course, if we see that the trade continues to go in our direction, we can definitely move our stop loss to an entry. As I said, pre-trade further profits without any additional risk. And I do want to address the next frequently asked question in my comment section and in my messages as well. So how to exit the trade? Of course, it is important to know where and when to exit the trade. So let's say if your chart analysis indicates that the market is going to reverse, you may just exit the trade at the present market price to maximize the gains from the small market move. On the other hand, you just might choose to remain in the trade if you believe that the market can trace a little bit but is likely to resume in the trend. So I mean trailing your stops and either exiting by getting stopped out for a nice profit, or by scalping your exit at appropriate time for even greater profit. And on that note, I want to say that trading requires patience, both in terms of market timing and in terms of self-control. The truth is, everyone makes beginner errors, so am I, which is why it's important to allow yourself to develop from them regardless of your previous trading experience. If you enjoyed this video, smash like and comment down below, and I will pop a screenshot over here so you're able to see my own results using this scalping strategy. And once again, guys, thank you for watching me, and until next time, bye!